Hello, this is Meetam Television exploring American cuisine. This video is being broadcast simultaneously through Meetam Television and Jaehyun. The United States Stock Sector Analysis Corner is a segment where we analyze how good companies listed in the United States are interpreted based on data. So this video is not about recommending stocks to buy right now. So I hope you all look at the data overall and see how to use it. And for those of you who are more interested or want to go deeper, it would be great if you could check things directly and make your own final investment decisions. Today's topic is about the semiconductor industry. In fact, introducing a company called Coupang in the context of United States stock analysis might be a first. Usually, I introduce a lot of foreign companies that are listed in the United States. As I mentioned in the previous video, and when I introduced companies like ASML and Hololux, there are many industries that are not American but are based overseas. There were cases where I introduced companies like Netherlands, Sweden, Israel, and even the United Kingdom where the headquarters are located. The company's legal entity and headquarters are in the United States, but its main business operations are conducted in Korea. This is my first time introducing a United States listed company. So today I will introduce a company called Coupang. People in Korea are already very familiar with Coupang, but for those overseas, Coupang is still a company that is growing in recognition and expanding its business. So I thought it would be helpful to briefly explain what kind of company Coupang is and what kind of business it does. When Coupang went public, it received a lot of attention. Especially in Japan, when you invest in SoftBank or Vision Fund, you think of them as huge companies with massive capital. So there were a lot of expectations and assumptions that Coupang must also be a giant company if SoftBank is investing in it. So after it went public, people realized that this isn't a Japanese company and that this company actually went public in 2021. So right after it went public, the stock price went up right away, but then it started to fall. After that, the stock price kept dropping for about 69 months, and during those 69 months, the price continued to fall. Then, in just about a year, from May 2022, in just about a year and 2 months, it dropped for about 9 months straight. So, there were a lot of cases where the price kept dropping, and from $60 to $9, you could see a lot of people losing money. So SoftBank also suffered a lot of losses. They took a lot of losses. After that, the stock price kept going down. But if you look at it recently, the stock price has been rising again. And as the price goes up, you can see that the mood is changing and people are starting to talk about a turnaround. Even so, right now, the stock price is still about 60% lower than its peak. So that's the current situation. I'm monitoring Coupang's business data to identify any significant changes. I'll try to determine if the changes reflect a shift in the business or just temporary fluctuations. Let me briefly introduce Coupang's business. Rocket delivery is very familiar to people in Korea, and now through Rocket Fresh and other services, Coupang is leading the e-commerce industry in Korea. I also use this company's services a lot now, but why do so many people use these services? Well, at first they offered a lot of price comparisons. I use it on Coupang, and then I also search on other Korean internet malls and different platforms, but when I compare after searching, it's just too convenient. In the meantime, when I buy something, Coupang is the first place that comes to mind. Interpark and other platforms offer cheaper prices at different times. But once you start checking just once and start confirming, after that, you don't really search on other sites anymore. People's time and these efforts are not free. So, just from there, I made the second purchase decision too simply. So now in cases like this with Coupang, there are cases where the payment is made in just a few seconds. Usually when you swipe with your hand like this, since your card is already registered, you can make a payment right away. So it seems like it's easy to make mistakes in that moment. There have been instances when the delivery was en route and I made the payment late, but the delivery was nearly there. Such cases are quite common. Cheap items are usually bought here. And if you buy them in advance, there are often things you don't really need, but you still end up buying them and feel like you have to go pick them up the next day. When you lack a product and need it urgently, like before a business trip, using Coupang's delivery service saves time and helps avoid asking the office for it. This convenience fuels the growth of such businesses. So now, it's not just about Rocket Delivery, but also Coupang Eats, food delivery, and other Coupang Eats services. In Korea, delivery used to be number one in terms of people, but now Coupang Eats is rapidly expanding its market share. That's the current situation. And now Coupang Play is doing over the top, but here, over the top isn't that big yet. However, if you become a member here, if you join Coupang's WOW membership, you can get free Rocket Delivery, free morning delivery, and free returns. So next, Coupang Play is also free. Because of these kinds of benefits, a lot of people are joining the membership, and that's the current situation. Coupang's growth is driven by their strong logistics infrastructure, enabling them to excel in their business ventures. With many existing logistics companies and large corporations like Daehan, Dongwon, and CJ already investing heavily in logistics delivery, why did Kim Bom decide to do it directly? In the end, for same-day delivery and morning delivery, Kim Bom built logistics directly, and this is seen as the economic moat of the company and the driving force in the market. Currently, the operating profit margin of SoftBank is expected to be around 20%. The adjustment, initially around 33% at listing, is now 25% as of May 8th, according to the latest news. So, over 7 months, they sold about 30 million shares, and from that, they secured about 1 trillion won in cash, and it seems like they decided to invest that cash into the artificial intelligence and portfolio sectors, rather than making additional investments elsewhere. So, they still hold about 20% of the shares. Now, Joo-hee owns the shares and Joo-hee is managing them. When you look at the defense industry, the value of the defense sector and the current performance, it's not that great. So if you look at the defense industry, it's about 54 points. That's a bit low. Among roughly 5,500 American companies, it ranks around 1,800th, placing it in the top 33%. However, this doesn't necessarily indicate it's a top-tier company or a must-buy stock. Even if you want to invest in blue chip stocks, you should be looking at the top 10% to 15%. Being in the top 33% isn't really that impressive. It's more of a reference point, not a target for investment. So you should consider it as a benchmark rather than an investment target. The reason I wanted to show it here is because the score was low and the performance wasn't great, but I still wanted to show it to you. The future growth score of 65 indicates that it's not a complete growth stock, as true growth stocks typically have scores of 75 or higher. However, a score of 65 suggests it partially falls into the growth stock category. The financial stability score is a solid 90 points. Additionally, the current cash flow score is 80, indicating a healthy cash flow. So if you look at it now, the lacking part is profitability and the unique competitiveness of the business. So because these parts are currently the weak points, the score is low. If these parts improve, the score will go up and the ranking will rise as well. So rather than seeing it as a completely established business right now, I think it's more accurate to see it as a growing business in that context. So profitability is also not that good yet. Low margin industries can't afford low inventory. So despite the need for margin recovery, these companies try to save through data when possible. The overall score hasn't changed much recently, but compared to a year ago, some parts have improved. If this trend continues for another year, it could improve further. Here you can see that the recent recovery has slowed down a bit, and this part is a bit concerning. Suiksung, the sections about Majinyu now require thorough review. The exclusive capabilities parts need restoration, causing it to lag. Other parts show a similar trend. Let's examine the real numbers more closely. If you look at this company's business performance has been declining like this, and after the business performance declined, now that it's recovering from the third quarter, it's becoming a case where it's going back up again. So for this company as well, there were still concerns in some areas that growth might not be enough, because even in 2024, the main drivers were still weak, and there were many segments that weren't showing a clear rebound yet. So even though sales are increasing, if you look at the right side here, you can see that operating profit is still falling. It used to be around 2%, but it kept dropping, even going below 1% at one point. So as profitability declined, if you look at the screen in front of you, you can see that profitability has decreased and the number of cases with lower margins has increased. After analyzing the data, the artificial intelligence considers many factors, makes a judgment, and assigns a score accordingly. So just by looking at the diagnostic score items, you can see how this company has changed recently. So, those who are good at investing or accounting can easily understand this chart or data, but for those who are not familiar with it, even if they have the diagnostic score, it might still be difficult to make a proper judgment. So, as this margin has increased, profitability has improved, and among the parts where profitability has improved, one of the main reasons is that costs have decreased. Recently, as you can see, the business has recovered and the margin has returned to about 1.7%. If it goes up to around 2%, it means that profitability is improving. So it is quite possible that sales and profits will recover quickly. So if you look at this company only as a business, it's listed in the United States and operates as a relatively light business model. And since it's sized for the United States market, it's clear that it's running a much bigger business. DoorDash itself is bigger, so DoorDash is even larger. We need to compare Coupang and DoorDash, but DoorDash has a lot of owners, and that's the situation. Also, when DoorDash acquired Wolt, DoorDash explained it once again. Coupang is not just doing this business because they think DoorDash is better, but rather as a data-driven company, they continue to analyze and interpret growth trends and data, and that's why they keep developing these kinds of business models. If you understand this corner from that perspective, I think it will be very helpful. If you look at the data for 2024, you can see that the order volume is actually higher than the business volume. The fact that the order volume is higher than the business volume is something that happened due to external business factors. For these parts, I will explain a little more about why these situations occurred and how we should interpret them. For this company, the inventory asset turnover ratio or sales cost turnover ratio is usually highest, with the sales revenue turnover ratio typically ranking below them. This industry is especially unique and different. If you look here, the accounts payable turnover period is 67 days and the accounts receivable turnover period is 66 days, so the accounts payable period is actually a bit longer. So what does this mean? When we talk about the accounts payable turnover period, you need to fully understand what accounts payable means. So, accounts payable means that I have already received the goods but haven't paid for them yet. In other words, accounts payable is the money I still need to pay. It's a situation where I've received the goods, made the purchase, but haven't actually paid the money yet. So if you look at the concept of a cooperative, it's a bit different. For example, in the case of platform businesses, a cooperative is not a manufacturing company. Instead, most platform businesses operate by having the platform and then providing services. What is sales revenue? In Coupang's case, it's not the money that the manufacturer receives. Since people are all individuals, B2C individuals pay with their cards, and when they pay with their cards, the date when the money actually comes in can be delayed until the sales receivable is settled. For example, if an individual paid with a card on the 6th, the credit card company will deposit the money later, so there is a gap before the money is actually received. But even though it only takes 6 days, there are companies that supply goods, and for those companies it can take up to 2 months to get paid. So when you supply goods to a company, after the transaction is completed, it usually takes about 2 months to get paid by those people in a fair way. So that's how long the cash flow is tied up at Coupang. Coupang's business model allows them to retain more cash and operate more effectively with their own funds compared to other companies. So because the sales turnover is high, that's not really a problem. The faster you sell the goods, the faster the cash comes in. From the perspective of a company that stocks up on products, you might think it's a good business, but just because the accounts payable turnover is high doesn't necessarily mean it's a bad thing. That's not the right idea. So, when the accounts payable turnover days are high, from a cash flow perspective, it can actually be more advantageous for certain types of businesses that need to operate efficiently. This is a characteristic of businesses with direct distribution platforms. Distribution platforms, including this company, typically have high accounts payable turnover days and low accounts receivable turnover days, reflecting their business structure. Currently, business activities are profitable while investment and financial activities are operating at a loss. Recent trends show that cash flow from investment activities is consistently negative. At the current rate of investment, they can maintain operations for approximately 10 more months. Past large-scale investments appear to be ending. If they resume, investment activities will show more negative figures, and as cash goes out through investments, the deficit will grow larger. This trend is expected to continue. Currently, by investing in KPEX to a certain extent that can be sustained, and by making capital expenditures while maintaining self-financing, the company is able to achieve growth and business activities, and is maintaining a structure that is supported by cash. That's how you can look at it. Foreign and similar companies are also entering the market, intensifying the competition. Korea's market is growing steadily, but there are concerns due to certain factors. Companies are expanding into Southeast Asia and other overseas markets, working to broaden their reach. They are developing strategies to increase the number of overseas businesses and expand market share following this business model. Currently, most of the business is still domestic, but these changes could drive Coupang's future growth. You can keep track of these developments through official investor relations presentations and news articles. So if you check those parts, it should be helpful. The reason why this company's earnings per share dropped so much is because of some factors that occurred in 2023. Now I'll explain the details behind that. The earnings per share is recovering, but the stock price remains sideways due to its significant decline over the past 6 months, stabilizing at the current level. That's because the earnings per share needs to grow faster and higher for the stock price to rise further. So you have to check the numbers carefully. If you look at the numbers behind, the company's sales are growing at 12%, 15%, and 12%. If you only look at the size, it seems pretty big. Sales are projected to hit 34.1 trillion won by 2025, with the original base around 40 trillion won. If you look for this, you'll be surprised too. And it's rare to see a company of this size, and if you look at the sales figures, it's really quite a large scale. Compared to that, the earnings per share is growing quite rapidly. The earnings per share growth rate starts at 0%, 3%, and 5%, then jumps to 27%, 0%, and 124%. In the following years, including 2027, it stabilizes at 3% based on these figures. The earnings per share is growing rapidly, and this trend seems likely to persist. I think that's something to keep in mind at that time. Then, if the earnings per share in 2023 was this high, it's important to think about why it dropped so much in 2023. That's what it means to look at the data from an investor's perspective. Because in 2024, sales continued to grow. Usually when sales grow, earnings per share also increases. But if the earnings per share in 2024 drops from 0.75 to 0.08, that's a huge drop. The question is whether this problem will persist, happen again, or get worse. So to understand this issue, we need to check why earnings dropped so much in 2023. For this part, I'll explain while looking at the financial statements. Some of you may already know this, but just in case, I'll briefly explain again about United States stocks and early education, as well as some related areas that might be helpful. If you look at the financial items here, I'll go over them one by one in chronological order. It was about $100 million, and if you look here, you can see that in 2023 it was $470 million, and in 2024, although it decreased a bit, it was still $430 million. So the operating profit has also decreased a bit, and the net profit should decrease by a similar rate. But if you look here, in 2023, the net profit was $1.36 billion, and in 2024, it was $150 million. So you can see that there's a pretty big difference compared to the operating profit. Because going from $1.36 billion to $150 million is a huge drop. It's about 1/8 or 1/9 of the previous amount. That's why it looks like a sharp decline. This is also reflected in the earnings per share, so you can see why the earnings per share dropped so much. Normally, operating profit is around $430 million or $150 million, so that's pretty standard. After that, there are financial expenses and other minor costs that come out. If you look at it this way, you can see that the legal entity is separated out. And if you look at it like this, you can see that the legal entity is being separated. Here, you can see that the net profit is much lower than the operating profit. And that's because of the legal entity. If you look at the legal entity, you can see that there are a lot of minuses. If you look at the legal entity adjustment or the consolidated statements, you can see that it's only the legal entity that's being affected. So, there are some tax-related issues here, but for the most part, there aren't many. However, when there are write-offs, the numbers can increase dramatically, and then there are cases where deferred taxes occur. When these parts arise, the order of priority can change significantly. So you need to find out why the corporate tax was negative and interpret the numbers accordingly. To do that, look for the original public disclosure, but it may not always be available. So if you want the original public disclosure, you have to go to the site, log into the system, and then you can access the SE electronic disclosure right away. If you click here, you can directly check the data disclosed on the electronic disclosure system. From here, you can easily locate the annual report and interpret the financial statements. So right now, I can't cover everything in detail, and I'll just go over the parts that I found and marked separately. First of all, when I looked it up, in the section called Assets in the balance sheet, there are some difficult terms, and there are some terms that are hard to understand just by looking at the item names. Lee Hyun Bim Sai, asset is called deferred tax asset in English, but if you call it deferred tax, it becomes a different concept. So from now on, I'll refer to it as deferred tax asset, and when I mention Biominsa next, it will mean deferred tax asset. So to put it simply, if you look at this item, it's something you see a lot if you work in accounting or in business. So if you carry it over to the next period, the government gives companies a coupon saying you can save on taxes later. That's what deferred tax asset means. Do you understand now? The company has accumulated significant tax losses over time. These losses can be used to offset future profits, resulting in tax savings as the company grows, creating a favorable financial situation. The company has accumulated significant tax losses over time. If they suddenly make a profit and the government demands immediate tax payment on that profit, it would be unfair to the company. It's a system that allows you to use the accumulated tax losses to reduce the taxes you have to pay. The 2-year carry-forward rule applies to capital gains, which are treated as assets. When the carry-forward period ends, you begin utilizing it from that point onward. If you pay less corporate tax than you should, or if you have accumulated losses, you can receive a coupon that allows you to pay less tax in the future. Domestic companies are the same. So if there are accumulated deficits, even if you make a profit for the first time after a while, you can use those deficits to offset your taxes until the deficit is gone. That's why corporate tax, or what we call assets, is called an asset, because it's something you can use in the future. That's why we call it a deferred tax asset or a tax asset. If you have this name attached, it means it's a type of asset like cash or inventory, and it's something you can use in the future. So a tax asset is an asset that can be converted into cash. That's why deferred tax assets exist, and that's correct. Let's say I'm holding a coupon, and in the future, when I have to pay taxes, I can use that coupon to reduce the amount of tax I pay. That's why it's considered something that can be turned into profit. So it's recorded as an asset. That's what a deferred tax asset is. The company's books referred to a tax deduction coupon as a valuation allowance. In the meantime, we as the company it seems we can't use all these tax deduction coupons. So we set aside a portion as a valuation allowance, thinking we probably wouldn't be able to use it all. But as time goes on, the situation changes, and sometimes we end up not needing that valuation allowance anymore. In that case, we just remove the valuation allowance. This isn't necessary. Then when you bring those parts back into the books through a reversal process, that's when a change in accounting profit occurs. So if you look at the financial statements, if you look here, it used to be called legal reserves. This is called corporate tax. When you carry the data over time, these parts that are shown as received here are displayed as minus numbers. Company financial statements show plus and minus results as net profit. For 2 years, the appraisal gains related to assets were not reflected and were not cash flow issues for the company, but rather book entry transfers. When those transfers are realized, they significantly impact the company's performance. This is because it was a transfer due to tax effects. And next year, in 2024, it's unlikely that a transfer of 1,050 billion won will be repeated for 8 months. So when you look at the earnings per share, you have to consider that these are the normal parts of the company. We need to be strict about which parts of the company's earnings are recurring and which are not. Usually, when we talk about recurring earnings, we refer to generally accepted accounting principles or strict accounting standards, and we focus on the recurring data. That's why, in this case, you need to adjust the temporary accounting parts to reflect the real recurring earnings. So I haven't been looking at the data lately, but when I see the recent trend in the numbers, I realize that I've been missing out on important data except for the legal results. Not Generally accepted accounting principles. Accounting is done differently from standard accounting practices. In the United States, companies typically report their financial results according to strict accounting standards. So that's why these parts happened. So, simply put, the earnings per share here is not calculated in a strict way. Originally, it wasn't $0.75, but after adjustments, it came out to about $0.10, and the actual amount received was $0.12. That's the level of difference there was. So the drop wasn't that big, and in the next case, it's normal for a company that's growing like this to be evaluated that way. If you draw it strongly like that, it will likely look like that. Personally, I look at it with a strong bias, so I tend to see earnings per share growth in line with the trend after the shock. But when things change suddenly like this, it's right to look for the cause and refer to it when making adjustments. But in general, when analyzing, it's better to look at it with a strong bias because it gives you more continuity. That's how I would say it. It was a difficult concept at first, but after hearing it once and then when I went to study abroad in the United States, I explained it again. Looking at the valuation, the consensus is that from September to November 2024, the high price range will return, and then as the stock price falls again, it will turn into a low price range. Now, if you look again, this area is undervalued and this area is overvalued. The price moves between the undervalued and overvalued areas, trading at a reasonable price in between. If you look at the price chart, you can see that this was the periods when it was most undervalued. The Joyce app has been released. If you download it from Google or the Apple App Store and use it, I think you'll find it very helpful. Next, if you look at the momentum analysis, and if you look at this company as well, you can see high-priced, low-priced sales, sales volume. These are what we call golden cross and dead cross, and these patterns have occurred a lot in this industry. And recently, when there was a buy signal, the stock price rose quite rapidly and showed a sharp upward trend in the short term. So a lot of entry signals are coming in quickly as well. So among these parts, I quickly checked the midterm signals and the most recent signals on the site and matched them as well. If you search for the KOPAX chart, you'll see that the signal came out on April 25th. The buy signal appeared 23 days ago, and currently it is up about 22.4%. And the valuation is only up about 3% so far, but it's still not at a high level. And if you look at the buy and sell signals here, you can see that the buy and sell signals appeared right after each other recently, and there was at least one occurrence here as well. After the initial signal, the market fluctuated before settling. Short-term investors either held or exited. When another buy signal appeared, they quickly responded. Since then, the market has been rising, and those who held are enjoying the benefits of the upward momentum. And if we look at the exponential moving average chart, which is the moving average line we usually check, you can see the short-term trend clearly on the screen. And you can compare the slope of the short-term line. So you can see whether the current momentum is alive or not. For the midterm, we mainly look at the 21-day and 61-day moving averages on the chart. So we focus on how the 21-day line is crossing the 61-day line in this section. Here in the past, at the end of 2024, there was a signal that sales would go up. But now, even though the number of sales and transactions is increasing, if you only look at this chart, you might wonder if the trend will not change just because sales are happening. The current housing market shows prices increasing at a steeper rate, further widening the affordability gap. So, when you use these midterm buying and selling signals and try to catch the timing, you tend to hold on a bit longer. When buying and selling late, you risk buying at a higher price after the trend has turned. However, you can ride the trend more aggressively without buying at the short-term bottom. This strategy allows for a longer-term market perspective. So if you can clearly distinguish between the short-term and mid-term, that's great. So when many of you analyze charts technically, it's good to look at the short-term when you're trying to catch the timing. And when you want to see if the current trend is strong in the mid-term, it's good to look at the mid-term as well. Mid-term refers to the trend occurring in this period. A signal appeared in May 9th, and if you look at the data here, it comes out like this. The value above should have been captured, and it was probably around May 9th. The signal appeared around May 9th, and if you look at the daily signals, the previous signal appeared on April 25th, so there was quite a gap between the two signals. So if you refer to these trading signals and use them, I think it will be helpful for many people who are investing. I'm not recommending that you sell your stocks right away at this moment. Even in times of recession and comparison, there are still many companies that are growing more actively, and currently these companies are holding onto a lot of data. Previously, stock price was the key factor, but now business fundamentals, position, legal structure, governance, and assets are crucial considerations. If you take a closer look at those things and share your thoughts and investments, it would be great to include these kinds of ideas that help others. I hope this video will be helpful for you. Please subscribe, like, support, and comment if you found this helpful. Thanks.